ja, dus doen zelfs like that in the time count.
Yeah.
It is on the test.
Yeah.
Can you understand me? Yeah. Okay.
Ben je al aan het filmen?
Ja.
Oh,
Net.
Oh, dat, Thank you, Stephanie. Welcome back, everybody. The next speaker is Willem van der Velden. He will talk about the Bitcoin insurance, a very interesting subject, at least according to me. So I ask you for a big applause for Willem van der Velden.
You shouldn't start with applauding because you don't know what you get, and maybe you regret it afterwards. Well, thank you that I can hear. Today I would like to look at a couple of questions with you regarding Bitcoin and civil law, because insurance is an instrument of civil law. I think it's important to look into Bitcoin first. What is it really according to civil law? And I make a distinction between Bitcoin with a capital B and Bitcoins with a non-capital B. With Bitcoin with a capital B, I aim at the system, at the software, the protocol. Bitcoins with a little b, I aim at the coins that you could actually possess. So I would like to investigate what they are, Bitcoins, and then look shortly, briefly into insuring for lots of Bitcoins, but also ensuring Bitcoin's value, because that is more and more important. And then as the last thing, the credit default swaps for Bitcoins, which I consider to be creative. Please free to ask questions. It helps me to better understand. I'm just a simple lawyer, and Bitcoin is a very big project. I understand just a very little bit, and I hope after today I'll understand much more about Bitcoin, and I may think a bit more about legal aspects. Law follows new development in society at a distance. I wrote distance. Sometimes it's not so respectful, but it's always at a distance. And we lawyers, we try to frame new developments to existing legal principles and sometimes legal mechanisms. The more general such principle, the bigger the chance that the new developments fit. And that's actually one of the main problems of legislation today. Try to make law fit exactly to an actual situation, but then the situation changes and the law has to be amended. You think of, for example, Roman law. It existed here in Europe for about 1800 years, and it's still after 1800 years because the rules were general. And now legislation that has to be amended every couple of months because we think it doesn't fit anymore, and indeed it doesn't fit anymore because it's so detailed, the law. So we need more general principles, and then law works better. Is it bad that to frame new developments into existing principles? I think it's a good thing because it helps us structure our society and understand better our society and make things work. Law is at the service of society if it is working well. If I look into the legal things that have been written on Bitcoin, it's not so much, it's not so much, but the things that have been written, most of it fraud, money laundering, problems with the Silk Road, dark or black markets, and the legal consequences. So do we have a criminal law system that there's good solutions here, for this situation? Do we have tax law that fits? Do we have supervision law like the SEC or the AFM in the Netherlands who can adequately react on what is happening within Bitcoin? But hardly anyone tells us what are Bitcoins according to law. A couple of months ago, I was asked to write an article on Bitcoin insurance. It was two insurance lawyers who asked me to join them in writing it, and since then I've been triggered by how can we understand Bitcoin and Bitcoins from a civil law perspective. That is something which triggers me more often. I wrote a thesis on investment, and there was very little literature in the Netherlands on investment funds. We have this reality of investment funds. For example, let's say we all invest today 100 Bitcoins into an investment project. A lot of questions come to us, like what happens if the investment goes bankrupt? Are we liable? Or what is our say in this investment? Can you vote? Do we take resolutions, etc., etc.? Many unsolved questions. And I try to solve or wrote how to solve such questions and first of all raise the questions. And that's what I would like to do with Bitcoin 2, to raise a lot of questions or a number of questions and about that with you. So I would be very happy if you can react to what I'm trying to make clear from the questions. I'm a Bitcoin hobbyist. I don't even, so there's a lot for me to learn. So please forgive me if I misunderstood some principles of how Bitcoin works, and help me to understand it better, and then I can help you to understand better the legal consequences. Bitcoin, according to civil law, as I understand it, it's a software project, a software program, you could say, which grants virtual money, whatever virtual money may be. And it grants this money to parties that comply with rules of the software, with the system of the software. That is true for the mining, that's true for the transferring, that's true for all parties involved. They act in accordance with the rules of the software. This software is an MIT license, which means it's an open source software. It may be used by anyone, and it may be amended by anyone. And it also states, this license, that nobody is liable, and I put the question here, is no one responsible? And which is very important within Bitcoin is that there seems to be any legal entity, and there Bitcoin is different from other securities or money or things that are issued. I put it here on the blackboard or green board. Usually, when we have an issue of securities, the issuer is the legal entity usually, and you have a buyer that gets those securities or even money. The buyer pays for the securities, and in return he gets a claim. It may be a bond, or instead of a claim, it may be a share, maybe shares, but he gets something from this issuer. Within Bitcoin, it's different. We have a software system, we have a software, we have miners and buyers, other parties in the markets. The miners, the Bitcoins are being issued to the miners, and the miners can transfer them to the buyers, to others, or even to other miners. It doesn't really matter, but it shows where the bits go. But here's a question mark: who is issuing the Bitcoins? Because there's no legal entity, or there seems to be no legal entity which issues those bitcoins. So whereas a buyer claim on the issuer, the miner, does he have a claim on an issuing party? Well, there is no issue, yeah.
I can answer that.
Well, yeah.
I don't know if I need the mic for that.
Yes, yeah, I can answer that. The top picture of yours has a very important word in there, which is claim. The buyer, in case of money like things or insurances or some other bases, have a claim on future activity, value, or transfer or something like that. Bitcoin that's absent. In Bitcoin is a pure ownership of something vague, a number or bits or whatever, a state in your computer, whatever you want to call it. But that's ownership, and I think the word claim has baked into it a future interaction. And that's absent in Bitcoin. It's pure ownership of something that's created out of thin air.
Thank you very much. I needed that. That's why I put claim here and I didn't put it here. Still, it's the question if there is a counterparty to the. We'll look into that later. There are also other parties involved, and I call them developers. People or parties that develop the software. Bitcoin is a software, the protocol. And that software contains a set of rules. I call them rules because that's my framework. But it is true if you look into the software. It has a system. And these rules, they determine how can you mine bitcoins, how many bitcoins do you get when you mine a block, how can you split bitcoins in order to fraction, how can you transfer bitcoins, things like that. There are many other questions probably that are dealt with within this protocol, within this software. Yes, also one very important thing that is dealt with there is what is the maximum number of bitcoins? We all know it's 20 million something bitcoins, the maximum, but that is also laid down in those rules. These rules, this software also defines how can this protocol, how can this software be changed? It can be changed because the developers do so. How can it be changed? Able to change, and who is entitled to change? And then another question, which is quite important too, I think, is who is able or entitled to recognize a transfer or the mining of bitcoins. And for example, the first question is very important because I just raised this 20 billion number of bitcoins. If the developers decide to double that amount by changing the software, this may have an important impact on the existing bitcoins. And does that comply with what I, as Bitcoin owner, which I'm not yet, but after today I'll certainly be, is that right to me? Yeah.
If I may do it, it is possible to raise the amount of Bitcoin, but it's like a democracy in the sense that the miners and the users they have to go with the guy who is raising the amount of bitcoins. So, for example, if someone uses software which raises the amount of bitcoin, but he is the only one in the whole bitcoin world, it will simply not work. But if I don't know where the kantelpunt is, where the tipping point is, but I know it is possible because people believe it is impossible, but that's not true. But it's not that easy because the users have to agree by using their software.
Thank you for adding that.
I think I can make it a bit more precise.
Yeah.
There are some rules that are put into the software And those rules are, a subset of those rules are rules about ownership of Bitcoin and creation of Bitcoin. Those latter ones are very precise. They are cryptographically protected. On top of that, there is a set of rules of kind of transactions you might want to accept into a mining operation. These are flexible, and miner by miner can decide by itself whether he applies spreads of those rules or not, because he knows it is compatible with the current use of the framework of the network. Then on top of that, there's the mechanism also working towards consensus, because that's what they say. It's a consensus building framework. There's many layers of consensus there. One is on top of the cryptography about ownership, and the other one is what's more or less at the top of your slide. The rules in Bitcoin software are not in the software; they are in the ecology where the software lives in. Incentives. You have incentives to play by certain rule. Not 100%, but maybe 80% of the time. That's good enough. Network is healthy. So there's several layers where radically different mechanisms are making for a distributed consensus on what software to use. Well, there's a totally different mechanism of distributed consensus of who owns Bitcoins.
Thank you very much. The power to amend the Bitcoin protocol, I took it from the website of the Bitcoin Foundation, which is, by the way, not a doing party. No? It's a foundation that has been founded, I think, 2 years ago in 2012 or something like that. And Bitcoin is all, it cannot be the issuer, at least not the initial issuer. And they have developers of the protocol, of the software, and is the main developer. His name is Gavin Anderson, or I read it's even Gavin Bell, because he changed his name. Maybe he was called Sakato or whatever, Nakamoto, or what is his name? Yeah. In a former life too, nobody knows. Anyway, it is said at the Bitcoin Foundation he heads a team of programmers who work to improve and standardize the existing code. So they make proposals, if I understand, for amending the software, and those proposals may be accepted and adopted by the Bitcoin community.
Well, again, to make it a little bit more precise, there are multiple Bitcoin softwares, multiple clubs that create Bitcoin wallets and nodes and mining software. So what Gavin is making is now the reference. It's just one implementation that people use as a reference when discussing rules and whether we should follow new developments. But the Bitcoin software.
Okay, thank you. Then the power to change transactions, it was a major, or still is, I think, a major topic in the news since the beginning of this year. I saw first things, and in the middle of the year, in June, there were big articles because of Ghash having controlling power, controlling computing power in mining, and that gives them the power to reverse transactions that they send while they are in control, and they might be able to double spend transactions that have already been done. So it can corrupt the system. There are also other things of frustrating the system to work if you have such power. And the power can be, as it was in June, for a couple of days at least, but it could be with a very small number of parties that can then, of course, cooperate like they do in other fields, not these parties, but many oligarchic parties, which is very far away from the initial ideas of Bitcoin, which should be carried by democracy and the mass. Now I would like to look better into Bitcoins, if you could say so. What are they? And I would not like to address the question, is it money or are they commodities or something else, but look more into the principles of civil law. How can we understand what they are? Are they rights? That's the basic question that I would like to raise today. Looking into Bitcoins, I think they form a little piece of software making part of a bigger software system. that software is subject to the before mentioned these part of them, because I now understand that it's a bit different from that I thought it was. But still, we can raise these questions. Can those big bitcoins, this money, can it be regarded as rights? Can they be regarded as rights? And can the software, the Bitcoin software, be seen as a set that apply to those rights? In other words, can the Bitcoin or the different Bitcoin softwares, if you could say so, do they contain the terms and conditions to the Bitcoins that apply to the money? And from this question, if Bitcoin rights, because you said you own Bitcoins, which is a legal connotation, it has a legal connotation which it supposes that actually own it, be the owner of, so it is something also in law. And I think we all think, at least, it is something in law, because we think we actually have Bitcoins or a right to. But if they are rights, if we would look at them as rights, then the question is, who are the counterparties or the debtors to those rights? And that doesn't mean that I want to introduce a claim, because I know that there is not a Bitcoin doesn't entitle you to a payment of money from a counterparty. Of course, if you sell it, you are entitled to the purchase price. But because you have a title on the party of a Bitcoin, but on the counterparty of this sale. Yeah? But still, if we say Bitcoins are rights and they are subject to conditions, well, who is the debtor of those rights, who comply with these terms and conditions? Maybe myself as owner, but maybe also you as a co-owner. And how does that relate to the miners or to the developer? Or is there even an issuer that we could construct in our heads or in law? Because any legal entity, also Philips and Microsoft or whatever, they are a construct of law. And before the laws were written, these legal entities already came into existence because they were accepted and recognized as entities. And maybe we could also accept or construct a legal entity by interpreting what is happening.
If the people don't mind me keeping interrupting you, and add a little bit to this. The interesting aspect of Bitcoin is that it tries to meld a couple of things that are separate in law. In law, ownership and control are typically separate concepts. And Bitcoin does a very strong attempt at combining them. Bitcoin beyond it. So in that way, it tries to step away of this concept that is in law, tries to root around that and just say, let's keep it simple. If you have to cryptographically control it, you own it. Which of course kind of works against an analysis. And of course, in reality, we get law looking around to do that. Issuance is very abstract, and it makes several legal interpretations possible. One interpretation could be that Satoshi Nakamoto created all the Bitcoins and he created a lottery where everybody could get his Bitcoins in time. That's just a legal interpretation. Another one could be that no Bitcoins exist until a miner found something that looked like a Bitcoin. Both interpretations are possible, and it's nice to talk to a lawyer then to see how would law pick up such a conundrum.
Well,
sorry, if you want to answer this.
No, we don't know yet. So, as I said, what I'm trying to do, and I'm happy by you responding, and I invite the others too to think with me and to try to discover what we are in law, because in the end, even if the Bitcoin community tries to escape the ancient legal world, they will at a certain moment anyway, and then the best would be to do that in a way that respects the intentions, the proper intentions of the system.
If I may add, at the previous Bitcoin conference we had a speaker that taught Bitcoin and Islamic finance, Jan Bergstra, and there he also came with what Reinhard mentioned, that his argument was that you don't really own a Bitcoin, but you have access to it, and that access is the fundamental realization of ownership, to say it like that. And his opinion, but it is in development, work in progress, is that it is a lottery somehow, so that it would be difficult to use it for Islamic finance because they are not accountable.
Okay.
But, it's just a remark or a note.
The fact is, if you say you don't own it, which I can understand, I'm not sure if it is true, but the fact...
The ownership is in the access to it.
Yeah, but the access presupposes that you have a right to access. So there is a right in it in case, or at least that is what I believe. As I said, usually rights are issued by a party that is the debtor. That can also be for powers. And a Bitcoin gives me power, at least the software around it gives me the power to transfer it or to mine it. And then with Bitcoin, as I said, there seems not to be a party issuing the Bitcoins. They are created as a result of the set. I read there is a green light by the hashing party. So if I mine new Bitcoins or I find a block, then the other hashings are saying, okay, God bless, it's for you, this Bitcoin, these 25 Bitcoins. And there is a kind of resolution that's built in software systems granting the newly shaped Bitcoins. Let's try to see if we can construct a counterparty. We could, for example, regard the Bitcoin community, which I think would be all of these parties. We could regard them as a legal entity. We could say, okay, Bitcoin is a community, and we regard them as an association. Parties that take part in this Bitcoin project, they relate to each other as members of an association or as a partnership. I think rather an association than a partnership, but both people. We could also look at Bitcoin, at the Bitcoin community as a trust-like entity, and the buyers and even the miners, as once they have mined, look at them as beneficial owners of, and the mining community, the parties with these, as the trustees, because they have to do that in especially granting this green light for transactions or for the mining. They should do that in the interest of the whole Bitcoin community. And I think the same is true for the developers, at least for the parties accepting these developments. However, we could also look at Bitcoin as a multi-party contract between all the participants. Why is it as a contract between the buyers, the miners, developers, everybody involved? There's one big web, contractual web, and that contract is governed by the terms and conditions laid down in the software they use. Then you don't have a legal entity, but you have a contract which states, okay, these are the terms and conditions that rule our relationship among one another.
Maybe as lawyers we know there are written and unwritten in society. So the fact that it is not all written in text doesn't mean that it's completely unregulated. So what I understand from the gentleman here when he explained how the developers of the initial software framework, as I will call it, that was used as the basis, and from that other developments like mining software, etc., was developed. So maybe the underlying foundation in actual was the initial framework, which included in a way we lawyers have difficulty the rules and regulations in the software world. In the software world, what was allowed and what was not allowed.
And they can evolve.
Huh?
And they can evolve.
And how this could develop.
Yeah.
And of course, so basically what we have is, on the one hand, trying to understand as lawyers and trying to fit it into our legal way of thinking, the basic concepts of the software industry, basic concepts of programming languages, or, as for example, a gentleman from Italy who is an expert in, for example, various aspects, disciplines like programming. All these sort of concepts in the programming world have major implications as to what you can do effectively with software, or speed, or whatever.
Yeah, indeed. There is a difference between the third line and the fourth, third and the fourth. The fourth says there may be contracts, but those are more individual contracts between the owners of the bitcoins and the hashing community, or even the developers. But I think in the end they are going hand in hand, because the developers, that doesn't work. Communities don't accept the developments. So these hashing communities, does it have contractual obligations towards owners of the bitcoins, not to frustrate, for example, their bitcoins, not to amend software in such a way that it would harm, really harm the ownership of the bitcoins. And they should, for example, search for acceptance by the owners in the end. How does that work? And the last option would be do not regard the bitcoins as rights, but as facts, or even as at least not as a right on a counterparty. Even there, I think we should accept that there are fiduciary duties from the parties with the hashing power or amending power to act in the interests of the owners of the bitcoins. Because they can change the content of my rights. And then immediately I say rights again. So it's a notation not to see them as rights. To change there to touch my also financial interests. Another question is whether I look at them as rights or as facts. What legal system would apply? Would it be the legal system of the first, of the first creation of bitcoins, and where was that? I don't know if we can trace that. Would it be the legal system of the bitcoins concerned were mined or were transferred to? So this miner that got these 25 bitcoins an hour ago is living in Amsterdam, and so on these 25 bitcoins, Dutch law would apply, but this buyer is living in Geneva, so Swiss law would then apply once they have been transferred to this buyer. We don't know. Or would it be Massachusetts law, because there is an MIT license? I think the last one would be the simplest, because then we have one legal system and we don't depend on where they are actually traded. But it may not be so easy as it seems. A few words on insurance. You can insure bitcoins for loss, especially after empty GOX was really empty. Many of the Bitcoin owners asked how to protect themselves. And one option is insure, to find an insurance that is ready to cover loss. And indeed, there are insurance companies that are ready to do that. They say we cover even for dishonesty of employees, of forgery, computer fraud. So it's really a large insurance. But if you want to be covered like this, you have to pay a very high price. From a legal point of view, it's not very interesting because it's a risk covered by a contract, and it's not different than any other insurance contract that we know. Okay, the risks are different, but the insurance idea is not different. But you can also insure your value. And this becomes more and more important because ancient world parties, if we could call them like this, normal part of goods like Albert Heijn or many other parties are now starting to accept bitcoins. And if they receive a lot of bitcoins, they have this difficulty that they have a currency, you could say, which can fluctuate a lot, and they cannot spend it. So how can they cover fluctuation risk, these volatility risks? And a lot of parties are asking this themselves. They want to sell immediately, but that may also be difficult because you don't know at what time you get how many bitcoins. So they ask, how can we cover risks? And you can cover them by a normal insurance. There are insurance parties, that insurers, who are ready to cover these risks. But you could also do it yourself. You can do so by or selling financial derivatives and they do exist. You could, for example, if you expect to receive in the next month, you expect to receive 2,000 bitcoins with your company, you can say, okay, on October 1st, I am selling 2,000 bitcoins, or 1,500, then I'm a little bit surer. It's the future. I make the contract and I say, okay, I will deliver them then. And it can also be the other way around, but that's not so in the interest of the parties that want to get their bitcoins they received, and they want money for it because they cannot do anything with the bitcoins, not yet at least. There is, however, quite a big risk in a future because let's say I sell 1,000 bitcoins per October 1st, but no to buy my goods paying bitcoins. Then on October 1st I have to deliver 2,000 bitcoins for the price they were today, and I don't have them. But then bitcoins are up high again, so I took the risk into my house that I wanted to cover. That's not so clever. There's another way, and that's using options. I can buy, instead of selling my bitcoins that I do not yet have, I can buy the right to sell 2,000 bitcoins on October 1st. If I have this option, this right, of course I have to pay more than when I make this future, because I have a right. But the advantage is I don't have to make use right. If on October 1st I do not have these 2,000 bitcoins, I just don't make use of my right. Or I have 1,000 bitcoins, I use half of my right. Or if somebody calls me, I switch off my phone. Sorry.
One question.
Yes.
With this option, are you? So you are buying probably an option that they will buy your bitcoins in the future?
Let's say you want to be sure that if you get 2,000 bitcoins in this month, on October 1st, you get rid of them price they have today, so that you can calculate your risk. Then you can conclude a contract with me stating you have the right to sell them on October 1st for 400, and then we take a discount, 460 dollar a bitcoin. And now it is October 1st, and you come to me and you say, okay, I don't want to make use of this option because I don't have any bitcoins now. Okay, then you don't make use of the contract. However, if you have these 2,000 bitcoins, you can sell them at that moment to me for the price we concluded there.
So you're really required to buy them from you?
Yes.
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 That's the whole idea of the contract.
Yeah.
Yeah, well, it's a paper contract, right? It's not the Ethereum contract.
Sorry, it's not.
I was joking. It's not the Ethereum contract. Like, it's not enforced by a blockchain.
No, it's enforced. Yeah.
Okay.
Yeah. If in the meantime I would be bankrupt, the contract would be void, or worth nothing. Other possibilities is swapping bitcoins for euros, for dollars, for yuan, even for oil. So it is very close to a sale, to a future. You know? You exchange them, and it has some consequences on sides. If, for example, the dollar is increasing in value, then in the meantime the counterparty would have to pay more. Whereas if the dollar is decreasing in value, Bitcoin is increasing, then the payment would have to be made per direction. And one thing that is quite a lot also, or not yet quite a lot, but it's all starting, you know, are contracts for difference. You could compare them to a swap, but the difference is that you actually don't ever transfer the bitcoins or the money. You just pay the difference to the party that has made the gain on the contract. But the option, the bitcoins remain with the party who had the coins, and the euros or the oil or whatever remains with the party who had that initially. Yeah. The funny thing is, if you take a normal insurance, the insurers have to cover their risks. What do? Well, they don't go to another insurer to cover those risks, because that would be very expensive. Sometimes they do for a part, they go to a re. But very often they use these methods to cover their own obligations. That's true for currency insurances, but also for Bitcoin insurances. So if you have the capacity to make use of these financial derivatives and you really understand what you're doing, it may be cheaper to skip the insurer and to hedge your risks by directly using these financial derivatives. However, if you are not used to doing that, if you do not understand what you're doing, better keep away from the derivatives. Only the option I could always recommend, because then your risks is the payment you make for the option. If you buy an option, you could also sell an option. I'm not going into that, but that is highly risky. Then the default swap. Some parties write that bitcoins can also be insured by a so-called credit default swap. What is that? That is a mechanism that says to the buyer, if this claim you have on the counterparty is not paid, I will cover your losses. That is a credit default swap. There is a credit, he is a creditor on this issuer, and if there falls under his credit, then the insuring party who concluded swap is going to make good losses live here. But as we said in the beginning, we do not have this claim. So if you sell a default swap to a Bitcoin owner, you really sell crap, I think, because that's the last thing you would need. And at least I cannot imagine a situation where a Bitcoin owner has such claim that could be covered if the Bitcoin Foundation goes bankrupt, or I don't know what I did.
You fixed it.
Well, even if the Bitcoin Foundation would go bankrupt, there would not be a credit default. This claim does not exist. So I would see these swaps as a creative kind of theft. That's what I wanted to share with you, and I'm very grateful for the input. If there are any questions, please let me know. There's a question there.
So two standard metaphors for bitcoins, or something that you can try to imagine a bitcoin is like, is one of them is cash, and the other is gold, digital gold. And each of them are very different. And I was wondering if you can comment a little bit about what would that mean for Bitcoin, because in your perspective, if you see them either as cash or as gold, or maybe there is a reason not to see them.
Yeah. I do not see them because they are not issued by country. And one of the biggest differences between money issued by a country and Bitcoin, for example, you cannot pay taxes in Bitcoin, and the salaries paid by the state are not paid in Bitcoins. If, however, a state would adopt cryptocurrency, I could imagine cryptocurrency to be a currency, so money.
Yeah, but that's, I think that's, you're looking at one aspect of cash, which is the fact that it is a cash of money that is issued by a government, but the ways that it resembles Bitcoin is the fact, for example, that if you lose your private key, the money is gone. There is nobody to go ask for the money. And similar with cash, if you accidentally drop a bag of cash into a bonfire and it gets burned, there is nobody to go and ask for it. So that's a similarity.
But I could imagine I shoot my gold to the moon, it's gone too. I think from a legal aspect, it's nor gold or cash. I would rather look at it as a right even if it's not a claim to pay money, but it's at least to make use of my bitcoins and to them within this system, and to expect there to be not substantially more bitcoins than these 21 million, except if we as the Bitcoin community, if you could say so, except that it should be doubled, for example. But it is very fragile as a right, but I think it's the best way to understand what is happening. I was talking first when I was discussing it with colleagues at university. I was thinking of the gold option, and I said, sort of intellectual property. Can we not see it as intellectual property? I have really own of this code of the bitcoins connected to my keyboard. And then he said, well, first of all, it's open source, so forget your property. And then intellectual property on codes is nowhere accepted. So on algorithms, etc., is never accepted until now. So then I thought, well, probably that is a dead end road. So I didn't develop that more. Whereas initially I thought, well, it's more like gold, and then that's why I came to this idea. Maybe you could or should even see it as rights, because we all have an interest as owners or members of this Bitcoin community. We all have interest that our possibilities, if you could say so, are respected by the other members of this community. Yeah.
I can add a little bit. I can add a little bit there. You are treating at the moment Bitcoin as code, and maybe it helps if we separate the code and the data at all. Particularly we're talking about intellectual property and existing intellectual property interpretations, the covered by people, and in that sense, it has some IP properties like copyright. Particularly, the MIT license frees you from the burdens of copyright in the reuse of that code. The Bitcoins themselves seem to be the data of the code. Simple thing is transferring numbers, but they also have this separation between controlled by some information that you keep private, your private key, and there are aspects of it, like the adult keys that are tightly coupled to this technology, that are made public. They are published on blockchain. They are publicly visible for everybody. They're not made obscure in any. So I think there's a lot of IP levels again going on here, and here it probably separates between what's authored by people and what's manipulated by that kind of code, and data separation might help here.
Okay.
And I have also an observation. I think, well, you are right that bitcoins are quite a strange stuff, difficult to define with the present legal concepts. But probably my impression is that insurance on bitcoins can be done because insurers already made it with similar things. One I get in my mind arrives either the artworks. And artworks has a very small intrinsic value. It is that the market gives to the art, to the work. And maybe it could be very high, but maybe the next auction it drops because maybe the interest on a given artist or movement drops. And so, but you can insure it. You can there is not possible to have a credit for swap in principle, because intrinsic value is undefined. So you cannot do a credit for swap on a painting.
Yeah.
Clearly, you could insure the default of some person to give you the bitcoins in this case, which is a different thing. But I think that to insure the loss, accidental loss, or any other things can be done.
Yeah.
To insure for the market, again, I think that today bitcoins has a given value, which is more or less recognized. I mean, you can average between among the various exchanges, but roughly you know what is the price. So even in this principle, insure the fall of the price. Really, probably a very big price premium because it's very volatile. So I think that from an insurer point of view, well, it's difficult because it is new, but it's nothing what the insurer should do with that.
I agree, and I think if we look at this sheet, the possibility of the insurer, they will be most interested in these contracts for difference, because there they do not have to pay in bitcoins. So if there is a default in the Bitcoin market, if it doesn't work, they can still transact their contracts for difference because they pay the difference. So the insurer itself is insuring the risk for the Bitcoin owner, and says, okay, if the Bitcoin drops below a certain level, I will pay to you. And the back office of this insurer is going to the market and is making a contract for difference, but there the insurer doesn't have to actually give the bitcoins in the end, so he can keep the bitcoins, the actual bitcoins, out of its books. And that's, I believe, that is what, for the moment, the prefer as a way of hedging the risks they take. Yeah. I think first there. Okay.
Yes, hello. I have a question too. If I look at the presentation, I wonder if the Bitcoin Foundation would be the issuer. Would then there be no legal issues? Would it then be a normal thing like a commodity or we see as money from a law perspective? That's one question. The second question related to that is that the Bitcoin Foundation would then not be a very credit-worthy issuer because they would never could repay when something happens. But these two questions, can you light on them?
Well, if the Bitcoin Foundation would be the issuer, it wouldn't have to be very rich, but it would make things clearer on who is entitled to amend the systems. Because it being the issuer, it could say, okay, we hold the key amending the software. And if a big group of buyers would say, okay, you're now making amendments that are not right, they could go to a court and they could sue the Bitcoin Foundation in order to stop her, or stop it, making this change, making this amendment. Whereas now, it is not clear who are entitled to make amendments, or making amendments anyway. Who can I sue? Who can I ask to stop making these amendments? So even if the Bitcoin Foundation is rich, maybe they are rich at the moment, I know they started a couple of years ago, maybe they invested in that. But anyway, the issuer wouldn't make bitcoins to a claim, on the Bitcoin Foundation for, let's say, $400 a Bitcoin. No, Bitcoins would remain the same, but there would be a counterparty that you could rely on, and that you could take to court if you need protection. No, you had a question about the money.
Yes, would it be seen as money?
Really, that really depends to the legal system and to what we understand by money. According to Dutch law, I think we could not find it as money because it's a currency issued by a state. So you could never officially see it as money. However, you could accept it as an instrument with what can make payments. So it's very close to, it may be regarded, not yet maybe, but soon, maybe, or in a longer way run, it may be regarded as similar as money, but according to Dutch law, it would not be money. However, you might be able to pay with it also officially. Yes?
Yeah, I'll try not to be too much of an advocate or evangelist, but
I think it makes use to look at it anyway, because what you told about your colleague.
Please talk more in the microphone.
Yeah, you spoke with your colleague about interoperability, and I also think, like what he said, that maybe made a little bit of a mistake, because I think 3 levels. So there's the software that is running this network, and it's really people deciding, okay, we're going to use this algorithm or system to reach a consensus on something, and it's like a ledger. And this is you have this ledger that holds your money. That there you can put a claim on, or well, I don't know, something. But that's different from the software and this. And then thirdly, they have the not transactions as in Bitcoin, but they have contracts, which are little programs that enforce, one state of the ledger to the next. And so you agree beforehand what will happen to the ledger, and you send your money there, and then the contract will be executed by a computer. So it doesn't. There's no person deciding, whether to do it or not. So that's a very, slightly different, more generalized. Maybe that's helpful. And so my question was, difference would it make whether you have, let's say, MIT, which is open source, or something like GPL, which enforces free software? The other question is about the derivatives. So they insure me for the volatility, but I was wondering, I read somewhere that they will also help stabilize the market because people have long-term interest, and I was wondering if this is true.
Well, to start with the last question, I think it's not true. There are derivatives that can really stabilize the market. For example, options, they stabilize the market. If you buy them. However, if you sell them, they may destabilize the market. And usually, derivatives work like a
Average.
yeah. So, if in the real world your risk is 100 and you put the same money in derivatives, it is 10,000. And if we see, I'm not talking about bitcoins now, but about derivatives in the ancient world, which is very fast. There are enormous risks in derivatives, and it's all boiling down to the question: are the parties taking these risks, accepting the risks? Because if I have a right to sell my shares or my bitcoins to you, have an obligation to buy them. But if you cannot pay for it, well, if it's just you, nothing really matters. But it can make a real big problem in the market if everybody was wrong and a couple of big parties are melting down, and then the whole system can break down. So that's a problem. So I don't think it will really help stabilize the market. However, it can stabilize individual companies to cut their risks, to hedge their risks, and if counterparties are acting in a proper way, it is fine.
Well, actually, even if you would run contracts on Ethereum, one thing is that you need to put the money in up front. So if I'm going to pay your salary for a year, I'm just going to deposit it there, and the contract will pay it out every month. So you cannot have this explosion of people saying, yeah, sure, I'll pay. Sure. I have to.
Well, except if Ethereum or what's the name fails, then you have a big problem.
Yeah, but that's a thing that happens at the software level, and that could similarly happen to Bitcoin. Then somebody made a big mistake on this consensus algorithm. Yeah. But then you have a problem.
Yes, I agree.
That's what people not pay.
Yeah.
Could you maybe comment shortly on if the license would change? Would that make any difference?
To be honest, I'm not into intellectual enough or hardly at all, so I cannot give you. That's also why I asked my colleague at your university. I do not know enough on there.
You were talking at some point about fiduciary duties, perhaps minors to play sufficiently by the rules that expectations of what a Bitcoin is be the same. use all these weasel words because I know it can change. We also had a speaker yesterday who said that the Bitcoin Foundation had it's not fiduciary, but a duty to keep Bitcoin abused. They should employ more cryptographers or get more knowledge in-house. So they're sponsoring do theoretically a better job. There's something going on that you didn't mention here, which I want to make you know, that within Bitcoin and the theories about it being money, we want it to be fungible. One Bitcoin has the exact same value as another Bitcoin. And something that's going on is that some people are proposing to break that by external systems, by making lists and whitelists of what Bitcoins are allowed and what not. So I'm aware that there seems to be let's call it political motion to do the opposite of the fiduciary duty, because they see a tension between what's possible with Bitcoin and what's legal in existing legal systems and what powers governments think they have. So I think also you would need to make an analysis between two worlds or models almost of does Bitcoin user and somebody in that culture of we together use a algorithm and together agree on using this algorithm to make a consistent system based on that ownership is reduced to control, as Toshi has tried to do, and an opposite motion that we are the government make rules, so some users of Bitcoin have to be made harder, and they do the opposite of what you could call the fiduciary duty of miners. They break this fungibility. The only comment I would make aware that these two worlds are actively trying to make consistent, but they are not consistent with each other. There's a clash going on, while internally both are consistent.
I want to thank you all very much. I didn't come here to earn, but to learn. And thanks to you, I did learn a lot. And I start understanding a bit more about the world of Bitcoin. And I hope to keep in touch with several of you so that maybe together and develop also a legal understanding of what is happening in the world of Bitcoin. Thank you very much.
There aren't any more questions. Thank you for giving this presentation. And maybe some next big applause for. As a little remark, what I liked, or what I like about the paper you produced also was that it was from a completely different part of the Bitcoin world, to say it like that. And, I mean, it was not because some Bitcoiners asked you to do it, but because you were interested yourself into it. So I thank you for this, and have a talk.
Yeah.
So we are now moving to the next speaker. We'll have a short break, some minutes, get some drinks if there are, and be back.